Let's bring in an investor who has successfully
course.
navigated the great financial crisis. Danny Moses, of Big Short fame, is founder of Moses Ventures. He's also co-host of the On the Tape podcast. Danny, great to see you. Pete was just talking about what is on the books, and to the extent that Russia is on anybody's books, there are also possibly positions that have gone wrong, on the part of many hedge funds out there, and we don't know how these financial institutions might be exposed. When you see big spikes in oil, you see big moves in commodities, someone's on the other side, on the wrong side of this trade.
Correct. You only have me on in bad times. I look forward to coming on when things are good. But that being said, yes, you can't have these types of moves in rates, currencies, commodities without there being some type of damage. That's too much volatility. And this is the first time in a long time that we've faced this type of sustained volatility without the Fed having our back. And you think about it, all the liquidity that's been being pumped into the system that's found its way into various crevices and parts of the markets right now are really being exposed. And so this is not a healthy environment to be in. I think we're going to see, whether it's loans to hedge funds, whether it's banks themselves, certain banks are exposed in various areas that others aren't. Some are more focused on U.S. economy and the U.S. consumer, some are international. So you're starting to see a little bit of bifurcation there, and the stocks are trying to tell you which way that's going to go.
So, hey, Danny, I listened to your podcast, and you've been talking for a while now that, you don't think the economy is as strong as, let's say, some might suggest when you look at employment where it is and that sort of thing. And so, banks had spent, 2020 just building up reserves, right, for defaults and that sort of thing, and both on the consumer side and on the corporate side here, but they've released a lot of those reserves. So what is your sense for how the banks are positioned for some sort of unforeseen credit event? Because it seems like equity investors right now are kind of getting in front of that.
Right. So banks generally trade with rates, right? That's kind of the go-to recipe for how, the same way that energy companies trade with oil. But yes, things were already getting a little bit dicey before the geopolitical risk really came really to the forefront here. And so things were already kind of set in motion. When you think about 2020, when the IPO calendar in Wall Street really shut down starting in the second quarter, last year was an easy comparison, right? 2021, I think, was record in most categories, IPOs and so forth. We are now facing very difficult comps. We knew that coming in. This has exacerbated many of those issues, right? So the economy was already, I think, on the precipice of slowing down. And Dan, you and I have talked about this before. I was never a believer that the Fed was going to go really more than 3 or 4 times. Anyway, I'm still a believer in that. I think they have to show a little bit of strength and do it. But when you start to pull that type of liquidity out of the market, that has some type of repercussion. And we have been, a lot of money into the passive markets, which I know you guys talk about on this show a lot. People weren't doing kind of bottom-up work, and now it's time to sharpen the pencil. So a lot of these issues were already here, and I think now it's going to be really examined closely. I want to say one more thing in honor of Paul Volcker, right? I don't think people have talked about this enough. Think about this. He passed away in December 2019, right? The Volcker rule changes were proposed in January 2020. They went into effect in July 2020. Well, the Fed was still printing money then, right, and putting a lot of money in this economy. So there was a period of time where banks then got the green light to go and lend more into sectors. And that actually is something that I haven't heard anyone talk about. It'd be great to have him here to examine this and to deal with this inflation in the market as well.
So when you think about all these potential risks to banks, Danny, do you think about these as potential, or do you think that they are actually there? And how do you think about trading this?
So the banks, I think the large U.S. banks are going to be fine here. I think they'll cut their losses. They'll deal with it. They're still very well reserved on the corporate level. I think those will be fine. I'm sure we're going to see a couple of banks that have outsized exposure to something we haven't seen yet that's going to come back to us, whether it's in Russia or somewhere in Eastern Europe that we don't know about yet, right? But that I can't tell you what's going to happen there. But I think from the consumer perspective, just to bring it back to what Dan was talking about, we are going to see, I think, a slowdown in consumer spending. We are going to see credit, which I think has peaked. I think people believe that. How much is a consumer okay in the U.S.? Sure. But if oil stays at a sustained level, and the Fed, I know we're having a retrenchment in rates here, but if the Fed does start to raise rates, that all puts pressure on the consumer, especially those with floating rate debt. So anyway, I think we'll see this thing play out, but I do believe that the U.S. banks are very healthy in terms of their balance sheet. I don't think it's a contagion risk among those Wall Street banks.
All right, Danny, great to see you. We'll try and talk to you when things are a little bit better.
Yeah,
Danny
please.
Moses.
Thanks, guys. All right.
Moses Ventures. It sounded like Danny thought, Karen, that we're overestimating the strength of the consumer at this point. Is there anything that makes you think maybe we are?
Maybe we're overestimating it. I mean, I guess we'll see retail sales, but I look at some of these names that are reporting, and they're pretty good.
Yeah.
So I don't know if it's a question of confidence. That matters. Even if the consumer has money, confidence matters, and maybe this Ukraine, the situation may cause some to step back a little and just watch.